On this day 4 years ago, Bitcoin hit its cycle top all-time high price, $69,000, November 10th. And then, of course, the bear market happened from that point. What we've been discussing over the last few days is the potential of a local low in amongst the rising number of bearish signals forming for Bitcoin at this stage of the cycle. Now, we haven't seen any breakdowns of the macro trend. So this is the trickiest time where we're trying to balance short-term signals, medium-term signals in amongst the macro trend still remaining up. So we've got lots to cover in today's video. Hit the like button, subscribe to the channel if you're new here. Check out the sale coming up for Black Friday on TIA Pro. More on that later. And of course, Instagram Q&As will be on again this week. There's a link down below. Okay, so I'm just going to start off with the short term and then get into the longer term stuff. Short term, we've seen this local bounce that we've been discussing here based on several of the indicators that we track for turning points. Now, of course, there's short term and long term. Sometimes that gets confusing for people. I see it across X all the time. But what we're watching for here are the short terms on the sentiment and the liquidity in the market. Short term, we saw a bounce out of the 4th of November low. The sentiment was very, very low, where fear and greed index was hitting extreme levels here. You can see in the red zone, 21, 23, 24, 7, then back down 24, 20, 22, and of course today it's at 29 as the price has now rallied. So we got a nice day out on Sunday, watching and waiting for this extra volume to come in. The weekly closing price was just underneath the 50% level as well. And of course, we got the 50-week moving average to have a look at. So a few more price indicators to have a look at, but let's finish off with the sentiment indicators. That is now bouncing out of the low. We also had the FOMO finder getting very close to hitting the purple area here. That's the panic zone. We've seen this multiple times before at turning points, and they can just be local lows. You can see here in the FOMO finder at purple, there was a few red days down, got a low the next day, and then it rallied out of that low. Now, it was only for a few days, of course, and so we want to see many of these signals as possible coming together around the same time, or even better, on the same day to give us that local low. So the sentiment readings were also coming down. They also bounced off the 50% level at $100,000. We didn't get a breakdown of that low. You can see here at the major 50%, 100,358. The close was above it, then a reversal. We had a day up, then Thursday, day down, then Friday, day up on a closing basis, that is. So you had a good green day. Saturday, down and up. So it was a very mixed bag over the weekend, but it was forming that local low that we've been looking at. Now, of course, I'm not flipping gears here. Macro hasn't broken down. Therefore, we have to still remain on the bullish side and still exposed to the market in that sense. But as I've been talking about for weeks, we are seeing a rising number of bearish signals that we've seen in every previous cycle beginning to mount. Therefore, it's probably a good place to start protecting some of the profits, of course, assuming that there are profits. Now, that doesn't mean you sell out of everything at the time, at the exact point. That's not how I play it. Maybe some people can, but the idea is that once you start seeing these signals begin to build, maybe it's time to start protecting some of that capital. So I'll keep repeating that until we get to the end or major confirmation, I guess, because at which point it's probably too late to start really taking out massive amounts, in my opinion, how I choose to trade. Now, in terms of some of the other signs we were seeing for a low in the market, that was, or a local low, that's just a short-term low, was the ETF flows. You can see down here, Bitcoin, the TIA Bitcoin ETF flows. You can chuck all these up on your chart using the indicators if you've got the indicator suite, of course. And then we can see the large outflows in the red. So the longer the bar goes to the bottom here, the more outflows there were. And in almost every single one of these occasions, it has marked a turning point for Bitcoin. So you can see on the chart here, many of those times, extreme volumes out here. And I believe it was around this low here as well. You still had extreme outflows compared to where the market had come from. There's been a local turning point. So we've used that as a sign of contrarian changes in trend, right? People are selling out. I'll come back to this in a sec. People are selling out at those points, and generally it marks a turning point. We had it back here in February. Also in April, you can see the increased volume compared to where it came from. Again, there is July, another local low, ran up to a new all-time high and then continued down again. And now we've got even more volume of the ETFs coming out at this point. So signs for a local low. Okay, Michael's gone back and checked the corrections. So far we're at a very similar correction to each of the previous corrections in this cycle, 22, 20, 22, 21. So this could be the 5th time out of 7 significant corrections that we've seen a 20 to 22% correction. The other 2, of course, were 33 and roughly 32%. Yes, in regards to the sentiment, it's basically been around fear this whole time, and the market has been grinding, trying to put in a higher, well, trying to base itself to then rally a little higher. And I'll come to those levels for the prices in just a sec. Now, another one of the indicators that we've been watching was the daily exchange volume. This has begun to turn up. Remember, we were watching for a low, the low not to break through $46 billion of volume, because that would mean that there is less and less liquidity in the market. Right now, we've seen the low base at around $50 billion and it started to rise again. Even though the market, well, the prices have been going down, generally speaking, over the last 2 days have been going up, we're still seeing interest. We're still seeing active investors or traders in this case, and they're still putting money into the markets. People have still got money for this stage at least. If we start to see this roll over and form a lower high, chances are we're going to see it break these lows here. And then it's pretty dire. Essentially, you could see $46 billion break. And then the last line of support is around $30 billion for this cycle. All of the daily exchange volume, you can see it over time. Every time you've hit these peaks, if it starts to roll over, you get lower highs form. Generally, you're going to see lower lows form. And then you just start to see a lot of that interest being lost in the market. Now, this was the other sign for a local low. I'm going to have to keep repeating that because I know there's a bit of confusion out there, local versus long-term. The long-short ratio is as close to dead even as you can get it, 50.01 to 49.99. What does that mean? Well, essentially when this gets, when this gets way out of whack, one side becomes too heavy in their trading and the leverage, that can mark a turning point. And what we saw those few days ago was the short side, this one here, at around 52%, and the longs were at 48. So you're starting to see too many people on one side of the market, basically a crowding of the markets. And they were crowding to the short. Therefore, we've now seen a change in trend. Here it is on the price chart. And that was happening around this area here, on the way down as well, but it had to get to an extreme level whereby the crowdedness was too far heavily skewed on the shorts. They get squeezed, and this is potentially what we're in right now, this short-term bottom, local low, and a bit of a squeeze to the upside, which is why we are now seeing a bit more of a balanced game here between the longs and the shorts. Now, the liquidations were also pretty high for that period. We did get up to the $2 billion marks through these last few days. This one here was just over 2 billion, day before about 1.3 billion. And then there were a few days here at around $500 million as well. So we started to see the liquidations pile up and then just start to ease off into that period where we didn't see any more significant downside. In regards to the price ranges now, for this rally to be confirmed, and rather than it be a dead cat bounce or like a failed rally into these resistance levels, we need to see the price get above 112,600. So I've been saying 112, 113 because that's also the 50% level from the top to the bottom. And for this OTP, the overbalance in time and price, it needs to exceed the previous rally that we've seen in this downtrend so far. So we need to see more buying action step in at this stage to at least change the short term. It's been going down. We're getting this short term uptrend, and to see this be prolonged into something more to get above the next levels. Next levels roughly around 116, that double top, 120, and of course the tops around 126. First things first, around that $112,000, $113,000 level is going to overbalance and move to the upside. And that means there's going to be, it's confirmed that there's more buying action happening than selling action. So that's what we need to see next. Now there's two more big events coming up for the moving averages on the weekly chart. One of them has occurred today. That was the weekly close above the 50-week moving average. You can see through this entire cycle, the orange line is your 50-week moving average. For the weekly chart, we haven't had any closes underneath that yet. And the typical signal around this is that if you see some closes underneath that 50-week moving average, one, ideally at least two closes under that level, then you pretty much have yourself the end of the bull market. Now that has just been saved one more time here with a close above the 50-week. The 50-week was at 103,000 and the close was 104,700. So getting very close to it at this stage. And the turnaround, look at that, we've got a nice little bounce here happening around 106. So the new week begins. Now the other event that's coming up probably in the next day or two is the death cross. Death cross, green and red. The green crosses over the red, there's your death cross. And it seems like we're getting that rally into the death cross, which has pretty much marked most of the lows, and you get the rally up into that level. So it's not something that I use to trade off my, for my own trading plan, but I know many traders are looking at it out there. There's obviously videos and information talked about it. So I'm going to keep watching that as well, because if we do see a rally around this point into that death cross, and then it start to fail again, like we do, like we watch with our 50% levels for resistance, then we obviously got to be on the lookout for a failed rally and then a test back at those lows. Hasn't happened yet, but it's definitely something that the market, we know, is watching at this point. So you got the death cross back here, rallied into the death cross, it pulled back, attempted again, pulled back again onto the 50-week, rallied again, and then started to show some signs of strength, which formed over August through to October. So 2.5 months to overcome all of these levels. Death cross, golden cross, sitting on top of the 50%, testing the 50-week moving average and closing above it. So a lot happened through that period of late 2024 and then again earlier this year in 2025. So if this is the case, well, then we've got to watch over this entire period. It's not going to be an answer that happens on the day. You can see the cross and then the test and then the cross again. Even through that period of the extreme volatility, it took about 2 to 3 weeks to get a clear answer from the point of the drop onto the 50-week, and then the rally, consolidation, and then the breakout above. Of course, next few more weeks came, you had the golden cross, marked a top, and the market corrected after the golden cross. So a lot of information coming up over the next, say, 2 to 3 weeks, but in the next couple of days, we should get that golden cross, the death cross, which then may mark a local top here. So this is the big week coming up. 113,000 is a nice round number above those levels. Watch that through the next couple of days. And of course, this week, many of those events are occurring. Are we going to see the market rally into them and then get rejected? Or can we see some signs of further bullishness where they break through those levels? I think it's going to take a little longer than that. So it's going to still be a testing point from this time. But the good news for the long-term bulls is that we saw a local low come in, and we're starting to see price rally in the week that we're expecting the market to give us an answer. And here we are, we're at the beginning of the next week. Now, one of the other signs for end of cycle, I hate saying that, but it is what it is, was MicroStrategy. On Friday, it continued to put in new lower prices, but had a reversal here. So that's at least a short-term bounce. So what we're starting to see are reversals here for local lows. It needs to develop into something much, much bigger to get to obviously bigger prices. Now, there is a bit of a silver lining in all of this, which I'll get to in a moment. But in terms of MicroStrategy, it broke the 230, nice reversal above. Now it's got a fair bit of work to do to get back into any position of strength. Otherwise, this is another dead cat bounce rally in its nearly 12-month bear market. The top was the 21st of November. Today's the 10th, so we're basically less than 2 weeks away from a 12-month anniversary of MicroStrategy's all-time high price at $543. Downtrend after downtrend. Bitcoin had been putting in new highs, while MicroStrategy had been putting in lower highs. So a very weak signal there. Now, although there's some local lows here and many of the other signals like USDT have been showing that they're starting to mount to the case of a Bitcoin all-time high being in, we didn't necessarily see the extreme FOMO at the highs. Just getting my words right here so that we can all be on track. We saw the extreme greed, I think this chart shows it a little better, around March 2024, February and March. You can see through here, that was going into those dark green periods. And then the next dark green was November. And the theory that I've got is that if we didn't see this at the top, then it's very possible that we don't see the huge collapses like last cycle, around the 70 to 80%. And we've looked at price ranges where this could end up for this cycle, but where those extreme greed periods were, February and March, the markets do like to come back and test those levels. So look, in the case of the bulls, ideally this holds. Ideally, got a nice little double bottom here at $100,000, break above 113, and then the rest is history. And it's all, you know, champagne and fairy bread. But if we do start to see this thing fall, well, then you've got a couple of areas to watch. I'm not saying it has to get there, but a couple of areas to watch where that extreme greed came from. And then in terms of corrections, you can see that just down to those lows is only 42%. I say only because previous cycles are between 70 and 85%, actually 75 and 85%. We've never seen a 70% correction. It's always been more than 70%. Now down to this area of the extreme greed, back to those highs at around 49, 50K, that's about a 60% correction. So it's still a lot less than prior cycles. Something to keep in mind if we do get to these failures. Of course, I need to keep talking about the bullish side of things here. Otherwise, people get a little bit triggered and they, you know, start to only want to see ups only. You're going to have to hang on a minute longer because to get to the up only, we need to see USDT break down. We need to see down only for stablecoins. Otherwise, stablecoins are going to continue up. We're going to continue to see a bleed out of Bitcoin and cryptos. And the same old stories, narratives, ideas come up when we're talking about stablecoins. And people say, well, you're getting a whole lot of stablecoins being printed. Therefore, you're always going to see the stablecoin dominance go up. That's entirely incorrect. Stablecoins have been increasing in market cap through the entire history of Bitcoin. Now, I started back in 2017 in the early days here when we only had USDT. Then came Binance Coin or Binance USD, which is now gone. Then we had USDC, which is still around in another big market cap. And now we're seeing a whole lot of other stablecoins also coming about. They could be taking away market share from USDT, but you're still seeing USDT market cap go up. So there's so many different narratives around why it doesn't work or why it's not important. But the chart keeps showing the same thing. It keeps showing when there is weakness in USDT dominance and strength for Bitcoin and cryptocurrencies. And then it does the vice versa. It keeps showing when there's going to be strength for stablecoins, meaning liquidity getting pulled out of Bitcoin and cryptos. And it has to go somewhere. Generally, it goes towards stablecoins. And then eventually some of that gain goes into fiat again. You'd ask why? You have to ask those people. Maybe they want to go and buy something that has some sort of value. Maybe land, something to live in, something to buy, something to use for fun. But gambling isn't the funnest game in the world. And I think many people are figuring that out with altcoins continuing to get decimated. Anyway, back to USDT, and that's my rant for today's video, is the weekly chart did see another new high this week. And I've got it on the candle so we can get a bigger look at the closes. It was just on the previous top here, 5.26%, and we saw a close at 5.26%. So for the bulls to come back, we need to see this break 4.75. That's the 50% level. You can see just how well it's been holding up for this current rally. Ran above it, closed above, tested it, and then we're back above. So 4.75, people are watching, or at least I'm watching, and then it's got to get back under the 4.6. That was roughly around that trading range before the market broke out. So what I think is potentially happening is the local low, or in the case of stablecoins, local high, and we're getting this run back down to test some of these levels here. Maybe it's 4.7, maybe it's 4.6, whatever it is, I think it's going to test some of these levels. That's going to be the critical point. Do we see a higher low here and a lower high for Bitcoin, and then it bounces? That's not good. That's not what the bulls want to see. Or do we see it come back down, test, rally again, and then break down? For the bulls, Bitcoin, that's what you want to see. All right. in the prior cycle, we've seen something similar, the breakouts, but it continued up in stablecoins, which basically led to the breakdown of Bitcoin and cryptocurrency, basically the bull market breakdown, and the bears took control from that point. So around this period, you can see breakout, or the run higher, higher low, and then the breakout comes back, tests the previous tops. Are we about to do that now? We're about to come and test these tops here at 5.2, or we're about to test the tops back at around 4.7. Either way, the same thing happens, and you then see another rally for stablecoins. That's if it can't break the previous resistance levels and it uses it as support. So that's not what we want to see for stablecoins. In amongst all that, Bitcoin dominance has continued higher, which means less money going into cryptocurrencies, altcoins. Last week we did see a local top and it's fallen again. That basically got the altcoin market super excited over the last 1, 2, 3-ish or so days. Now, if this dominance continues to head higher through what we're talking about with the bearish signals beginning to mount, that would not be a great sign for holding altcoins. Obviously, Bitcoin dominance is up, but if everything is going down, then altcoins are going to be going down even more, even if the dominance is going up. So Bitcoin dominance can be going up because it's just dropping less than what altcoins are dropping. And we can see from altcoins, they're having their short-term bounce here, something that we've covered before after local lows. It is sitting on its short-term 50%, which is a good sign here, but there's a lot of work to do. It's got to get back above 8.5%. They're the previous tops, a couple of swing bottoms coming out around 8%, currently sitting at 7.2%. So a fair bit of work to do here before it can get into any sort of area of short-term strength to then tackle the big numbers, 10 to 11%. They're the big numbers here, being the major 50% level. For Bitcoin targets this cycle, they're still intact because we haven't broken down from any of the major levels. One of the major levels, that 98 to 100K, that's below these swing lows here. And then of course, back below 75K. So while they remain for the bull side, well, we've still got the targets up around mid 130s to mid 140s. Any sort of breakdowns from this point, we have to start reassessing these numbers. But as I've said, while the macro structure is still in play, I've still got those shorter term targets. I have talked many times about the top here for 2025 coming in at around 122K. Now I posted this back in January, so the 2nd of January 2025. A few things happened, a few things didn't. Bitcoin's been the biggest one there. Bitcoin will hit at least 122 this cycle. So far, that's basically done pretty well. Obviously, the final top there around 126 so far. Ideally, that forecast is absolutely wrong and we start to shoot much, much higher. I'd love to hit at least that mid 140s, but of course, the chart's going to tell us what is coming next. In the case of Ethereum, also hitting a short-term low here, bouncing off the 50 week, and is getting closer to that 50%. So it really needs to get above $4,100 to also bring the bulls back in charge. And we're watching that with the overbalance in time and price, $930. This is just the signal for the short term to take control again. So far, it's been down. The bulls need to push this above 4,100 by 12 days from the low. So 12 days from the low is, there it is, end of next week. So by Monday next week, if it's not closing or testing above 4,100, it could be a failed rally, or it basically increases the chances of this Ethereum move being a failed rally. Now, I'll cover this in the next few videos to see where this money is flowing. I have talked about it 2 or 3 videos ago, looking at the liquidity for Bitcoin and cryptos, basically leaving and not coming back. And the proof of that is the charts. You can see that Bitcoin has been losing ground against the NASDAQ. It now buys less NASDAQ. It's been losing ground against the S&P 500. It's been losing ground against gold. It's been losing ground against silver, and it's been losing ground against tech stocks and AI stocks. So if you did this comparison against NVIDIA, Microsoft, any other AI stock you want, you can just see how much weaker it has been. So although people are still trading Bitcoin and investing in it is just less money in it now, and the attention has been grabbed by AI. So until that turns around, we may begin to just see a bit of a lagging market here. And I think that also goes in hand with the theory around the pullback or the correction for Bitcoin or the bear market for Bitcoin, whatever you choose to call it, may not be as severe as the price cycles yet, because we haven't seen, one, the sentiment go absolutely nuts in the last several months. We did see it in November, of course, and March, February. And two, the liquidity is still there somewhat, but not as much as other narratives or other sectors that are basically taking the spotlight for this stage of the cycle. And of course, this stage of the cycle leading into this final top, I think we don't have very far to go. So unless this happens soon, this meaning Bitcoin running up from here, taking out 113, taking out 120, getting into new all-time highs, then there really isn't much time, much money, much interest, and so on left for this cycle for it to get up there. It's a difficult one at this last stage because until those numbers have been broken down, until you see a breakdown of 98 to 100K, then you just have to err on the side of caution, stay exposed to the markets that you think there is further upside. I've talked many times before, I'm still exposed to Bitcoin. However, I'm taking measures to lessen the risk and reduce my exposure to it. I'm still exposed, but reduce the exposure based on everything else that I've been covering here in the videos, and of course with members as well. So if you want to know more about that and how to navigate your portfolio through these cycles, through different asset classes, get on the waitlist for Black Friday sales on TIA Pro. That is coming out very, very soon. And I'll see you guys back here at the next video. Thanks again. Like and subscribe, and to have a fantastic day. All right. Peace out, guys.